Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, a recent study conducted by a leading financial institution has revealed that currently in urban India, only 13% of urban women are confident about the adequacy of their financial plans. The other startling figure shows that 42% of educated urban women have only a basic financial plan in place. That too falls short of covering long-term goals for women. In this day and age of gender equality, where financial security is a key to independence, these facts come as an unpleasant revelation. So why are women hesitant towards financial planning? Should women plan differently from men? To give us more clarity on the subject, we have with us Yashish Daya, co-founder and CEO of Policy Bazaar. Welcome to the show. Yashish, clearly, the figures that this study tells us doesn't paint a very rosy picture as far as financial planning in women is concerned.
Yeah, and you could ask the question that if you've got a man and a woman in the same family, one of them needs to plan, and usually that responsibility comes onto the male. Usually, I'm not trying to be gender biased here, but at the same time, and people say, why should it be different? One person can plan for the family. Now, fundamentally, men and women go through have a slightly different mindset. While men have far more of a growth mindset towards financial planning and how much can this money become, women have more of a security aspect towards financial planning, whether they are working or not working. And that happens for a couple of reasons. First of all, while in the West, paternal leave is as strong as maternal leave in childbirth, or becoming. It's not quite there yet. Out here, that concept is still very weak. So usually a woman will take a career break of some sort when children happen. And that's important for the family. But when that happens, then many women then don't come back to restart their career. So that break is something that is different about men and women, and hence financial planning needs to be thought about. Women also tend to think a lot more about children's costs and children's, what all needs to happen in security from that perspective. And usually, in many families, because it is socially acceptable so far, the male pretty much has to be earning. The women sometimes tend to be the non-earning member, in which case, specifically in the case you've got one person earning in the family and there's a lot, whatever unfortunate events, whether it's an accident or whether it's a death in the family, the woman stands to be more vulnerable financially from that situation than the male, because if the male was the working person, in case any such unfortunate event happens, the funds are still there. I think the third or fourth factor that is, unfortunately becoming a reality is the rate of divorces, etc., is going up. And in that situation, if you have one member earning and one member not earning, or one member earning less, then the member earning less is sort of left in a difficult position. So from all these perspectives, women do need to be involved, and they do need to think. And I'm not saying, you need to get
So what should the first steps be as far as financial planning for women is concerned? What should they do? Suppose they really haven't paid too much of an attention on
I think there are two aspects here, right? One is when they are alone, so before they are married, or in case they're not married at all. So that applies, that is pretty much the same as for the male, in the sense they do need to think about pension costs and the long-term benefit of investing early, and hence they need to start investing early in some form of a unit-linked plan, etc. They need to have their health plans in place. And I believe while accidents are less common in the case of women than in men, I think health insurance at least does need to be covered. However, the moment they become a family, as in they become a couple, they do need to start thinking about life insurance. So if you look at financial planning from two perspectives, from a very simple perspective, you will have certain goals in life. Every family has certain goals in life, whether that be to buy a car or to buy a house or to save enough for the children's education, or whether it be to save enough for retirement. Now, some of these goals will be short-term and some of these goals will be long-term. The short-term goals you will usually address through financial planning, in the sense that you would start investing in something and you would collect that money, build a corpus and kind of address them. However, the long-term goals, there is a slight issue here, because in the long term, things happen. Unfortunately, bad events can happen in the long term, and the chances of them happening over a long term are far higher than over a short period. And hence, whenever you have long-term goals, you also need to think protection, insurance, along with those long-term goals. So if one is looking at a pension plan, then the protection of the earning member with that pension plan is also important, because otherwise the plan will go haywire if after 2-3 years of investment, suppose you decide that mutual funds are a great investment vehicle, and one starts investing in mutual funds, 2 years are over and an unfortunate event happens and the earning member is no longer there, then the pension plan's gone for a toss. So that is where a unit-linked plan or something like a waiver of premium plan or something like a dual life benefit, etc., does start to come in. And there's lots of options there. And I think a woman getting involved in that, both spouses getting involved in that is fairly powerful.
So that's an important point, that both the man and the woman, they need to sit down together and plan their financial future together.
Absolutely.
I think that can really reinforce the family in many ways, because that's another topic they don't discuss. I mean, women and men they may be married to each other, but they don't invest. They don't really discuss their finances.
I think if you and the men are equally worried. They are in fact more worried. So men have been, there have been lots of research at the time of retirement when men have been asked, what are you worried about in your retirement? And a lot of men say, I'm worried about my spouse in case
something
I'm gone,
happens to me,
in case something happens to me, who's going to take care of her costs? However, when you look at pension plans that have been bought or sold so far, most of them are not dual life benefit. So most of them have benefit, which basically means that the primary earning member will keep getting some pension till the day that individual, stops living.
That's an important one.
And dual life benefit means last survivor. Now, that's not the only option. There are lots of options in there. Last survivor, both the benefits.
Let's look at the traditional ways that women have been investing in. What are those in your experience?
Women are usually, from whatever I have seen historically, I don't have too much data on this, but gold. India has the largest reserves of gold for not for any small reason. That's largely because women have been storing up gold for a very long time. Now, gold does tend to be a bit illiquid, and when you do go to sell gold, people who've experienced that will realize you don't actually get the full value. You do get a lower value, and I think you lose about 10-20% in the making charges, etc. So it's a good decision. But it's a bit of a bet that gold will keep going up. It's not guaranteed. So gold prices have been going up in the last 5-6 years.
Pretty stagnant also recently.
Well, if you look back at the last 15 years, they have gone up, enormously. So gold has become a form of currency. But remember, that is not guaranteed in any way.
Right.
Just like any other currency is going up or going down.
So then, what are the alternatives? So you keep gold aside. So what else? What else can women look at in investing?
I think from a real estate perspective, there are certain benefits that have been provided to women. I think they should certainly be participating in most of the real estate purchases, so that part is addressed. I think a woman should. There are 5-6 things that any family needs to be protected against. Those are death, disability, critical illnesses, health insurance, pension planning, and child cost planning. And a woman and the man should just think about these 6 that I've just mentioned. I think the primary earning member needs to be protected against death. I think both members of the family definitely need to be protected against any critical illness, because those unfortunately happen to people, and that's why we know of them, and India has a very high incidence of these. I think the third part, accidents do happen, and they are very unfortunate when they happen, but when they happen, they become a fact and they need to be faced. So having a personal accident policy helps. The best part is these policies don't cost so much.
Right.
So if one was to take a 50 lakh rupee personal policy, personal accident policy, it'll probably cost about maybe 500 rupees per month. So having policies of that sort, which don't cost so much, but in the unfortunate event, they do benefit quite a bit. A term insurance policy, 1 crore might cost 10,000 rupees, 11,000 rupees. So these are not so expensive in a year. So about 1,000 rupees a month. So these policies will not break the bank. I think having a plan both for pensions and for child cost is very important. One has to look at how cost of education has been going up to understand how critical it's going to become for us. So just think of when we went to education and what is the cost of the same institute today, and you would find within 5 years, within 10 years, costs have been doubling, quadrupling.
Right.
And if that's going to be, if history is any way to look at the future, one does need to plan for that. I think pensions, how much ever, India used to be far more of a non-nuclear family structure, and people used to be supported by the younger generation. That is breaking down. again, fortunately, unfortunately, the fact is that it's breaking down. And the fact is we are nuclear families now. And I think India is going through that strange period when we are moving from a non-pension zone. So most people used to either work in the government or had a large family to support. This is probably going to be the first generation which will not have that family support.
Right.
And a lot of people are in the private jobs where they do not have a pension. And I think that is going to be a very nasty surprise for a lot of people. So instead of falling prey to that, I think the women should get involved in that pension planning. And please understand how these pension plans pay out, because they do need to pay both. And both the man and the woman are equally vulnerable to being alone in old age without a pension.
So specifically, let's talk a little bit about insurance. What are the kind of insurance plans that women can take? And after that, we'll talk about other aspects of it. But that's really important. And you talked about term insurance.
Yeah. So I think specifically when one looks at women-centric plans, I think the critical illnesses can be somewhat different for women. See, accidents are the same. Health is usually the same. So because health insurance is usually used for people getting sick or whatever. However, critical illnesses can be quite different. And having women-centric critical illness plans can be fairly helpful. There are plans from Aegon Religare, from Bajaj, from HDFC Life. And I think one should look at these plans because just because, the man and the woman are different physiologically. So clearly there is some of these women-centric plans can add more value to women and can be acquired by them. Usually though, they do tend to be a little more expensive. So do look at it from from a lens of compare it with the non woman-centric plan and look at it, but it does cover certain specific diseases. So let's say it covers ovarian cancer, right? But ovarian cancer would be covered in the general form of cancer also. Although this one may have certain additional benefits in the case of an ovarian cancer. You have to just see how much extra you're paying for that additional benefit, because the other diseases can still be around the corner. So I think from a critical illness plan, it certainly makes sense to go for women-centric plans. Otherwise, a lot of them are marketing. So from an investment perspective, I think having a 2-3 year break in payment, if you have policies of that sort, that certainly helps women, because there can be periods of non-payment in the case of women.
And that's available with
those are available with most of the insurance companies. They will have plans which allow you a break in payment of 2-3 years.
Right.
And having a plan of that sort will help the woman, because there will be 2-3 years, there may be 2-3 years in their career when they may not be earning and they may not be paying taxes in that period. So some of these plans will not be very effective if the tax benefit were not there.
Right.
So if having that 2-3 year gap in payments can help women.
Right. All right, Yashish, it's time for a short break. But when we come back, we're going to be taking your questions. You can write to us at ask.policybazaar.com, tweet us at Twitter at policybazaar_in, and we'll see you shortly after. And Anand says, I've been advised eye surgery and I have an insurance policy from Cholamandalam that I purchased last year. The cover is for 5 lakhs. I wanted to know if I can claim the eye surgery in this. Yashish.
I think one has to look at the particular plan, and it depends on what kind of eye surgery one is talking about. So cataract is usually not covered in many plans, and it's a permanent exclusion. And the reason it's a permanent exclusion is because it's considered cosmetic by some, I know, as a patient requiring that, you would not consider it cosmetic, but most of the insurance industry can consider it cosmetic. And so cataract is a permanent exclusion in a lot of health insurance plans. So one just has to look at exactly what kind of surgery you're looking for. If it's a surgery because something has happened to your eye, which is non-cataract, then it should be covered in a normal health plan.
Right, we've got Shashank Deshwani from Mangalore, and he says, I have Bajaj Allianz Star Health Policy in continuation for the past 4 years without breakage and without any claim. I disclosed everything at the time of taking the policy, including a right femur fracture which occurred about 8 months before, including the discharge summary was shared. I was told that after 4 years it would be covered. Now the company has denied the cover altogether. Please help, he asks.
So, see, it's a very specific question about exactly what disease you have and what policy you have and whether that particular policy has a permanent exclusion to that or not. I do appreciate you've been with the plan for 4 years, and what that means is your temporary exclusions are over. So the policy, the cover cannot be rejected from a temporary exclusion perspective. However, you do need to look at your policy and see if there's any permanent exclusion on that particular incident. The second thing you need to do is write to the company formally and ask for a response telling you why you're not going to get covered. And once you receive that, if you are not convinced, first of all, if the company doesn't have a very legitimate ground to refuse you, they would find it difficult to provide you that letter, and they would usually go ahead and make your claim or pay your claim. But in case the company does provide you a formal letter which states the reason, and you don't believe that reason is logical, then you should approach the regulator, the IRDA, as well as the ombudsman. And if the company is in the wrong, they will have to make your claim.
Right, we've got Rajesh Mehra from Delhi, and he writes, I have a family floater policy for 3 lakhs, but my insurer is refusing to enhance the cover, saying that it is because of my mother's age, who's 70 years. I've been insured with them for the last 10 years and have not made a single claim ever. I have even complained to the IRDA, but to no avail. What should I do, he asks?
So see, the particular insurance company that you're going to may believe that you're, because of your mother's advanced age, 70 years age, they may believe the risk is too high to take on any additional coverage. Because people will, look, the fact is at some age, people will start having some sickness or the other. It's normal. And 70 does tend to be an advanced age, and the chance of sickness does increase for a lot of people. It may not happen in your mother's case, which is clear that for the last 10 years she's made no claim. However, what you can do, in case your company doesn't provide you any additional cover, is you can go for additional plans. Now, there are specific plans for senior citizens, which you can go for. So the Star Health Red Carpet plan is there. In addition to that, you can even go in for non-senior citizen plan, which covers without any co-payment, etc. So co-payment is a share of the cost being taken by you, but without co-payment there are plans that do cover. So L&T Insurance has one, Religare has one, of course Max Bupa has one, Apollo has one. So these plans can provide you cover all the way, and if your mother's in good health, then they shouldn't have a problem giving you another 3 lakhs or 5 lakh rupees of cover. I would suggest you also try to see if you can get a critical illness cover for your mother, because critical illnesses can hit at any stage. So if you do get that, that's great. If you don't, if she doesn't clear the medical for some reason, there is a chance that the companies may deny cover. But I think spreading the net wide and seeing who can provide you the cover is a good idea. I would not advise you to try and port your policy, because it will be very difficult to port a policy at such an advanced stage. And the fact that you have the base 3 lakh rupee cover, do not give that up, hold on to that and keep making the premium payments for that. You should get an additional cover. I think that is perhaps the right advice for you at this stage.
Right, Yashish, thanks a lot. That's all the time that we have on this episode of Policy Bazaar. But do write to us with your questions at ask.policybazaar.com. Tweet us at Twitter at policybazaar_in. And we'll see you next time with another episode of Policy Bazaar. Goodbye.